All right, we're going to concentrate on three things today. The first thing is give you a background, and that's to tell you that the markets have been up since the beginning of the year. Yesterday, which you see at 225 was a poor high, was a market that went up all day until it broke late in the session. So that's the first kind of break we've had. But remember, what traders are doing is they're buying all breaks, and their habit is to do nothing but buying because that's what works or has worked since the first of the year. Keep that in mind. Traders do what works until it doesn't work anymore. Second thing I want you to focus on, and this is really what this segment is about, be focusing on developing value. We talk about trading value all the time. And what happens to traders, when we're having classes, they all agree. And as soon as the markets go live in the morning, they start following price, and very often they forget about value. Value is really a great filter for what is really going on in the market. Third thing I want you to focus on today is being able to understand the important references. Understand where markets make highs. Understand where markets make lows. Understand pullback levels. They are very important. They are nuances. They seem small at the time. They are not. They may seem insignificant, but you will be amazed as you pile them on top of each other. And as Jen liked to say, lever after lever, they become exceptionally important. All right, overnight inventory is 100% short coming into the 26th. You can see prior to the opening, the market has come off the lows quite a bit. Notice the green circle. The green circle, is approximately where the market's trading prior to the opening. We see the very prominent point of control from overnight, and we see the half back level from overnight. Those are levels that have good odds of being revisited. So the market is probably geared up right now, and it should be just a relatively short period of time before we watch the market's opening. The opening is going to take place within the overnight range, and remember, overnight inventory is short. When overnight inventory is short, the odds are that we get a counter auction or a correction to help balance out overnight inventory. You don't want to get misled by those counter auctions. Sometimes you can see price going up and it can mislead you. Okay, so we've seen the market is back and forth through the opening. The two references I'm looking at are the half back on the lower end and the very prominent point of control, and the overnight high of coming into the session. Those are my two short-term references to begin with. So let's watch. We're playing, what are we playing at 5 times, Jen?
Yes, 5 times the speed.
Okay, we're 5 times the normal speed, just to give you some idea what's going on. So notice when we open and we're trading down here, the first thing that comes to my mind is the potential to have lower value today. That doesn't mean we're going to get lower value, but when we start trading well below the low of yesterday's value, the odds are better that we're going to have lower value. And lower value is one of the 3 things that we are focused on today. Notice that the overnight half back and the early morning low are just a tick or two from each other. The market has back and forth through the opening. We said the next upward reference that we're looking at is going to be the overnight high. The first thing they'll look at is the low from the 25th, and then they'll look at the overnight high. So those are just, again, we said we want to focus on references. And you see the market is just trading within those references. The yellow line there is the high from last week also a very prominent reference. So today's high is yesterday's low. This morning's low is half back from overnight or just a tick or two above it. So early on, we have no confidence. The lower or the more time, the lower the confidence or the more time the market spends down here, the more difficult it will be to get higher value or even overlapping value. I mean, fully overlapping where, the high and low of today and yesterday overlap. Not impossible, but we always think in terms of odds. Okay, so the market's playing out. We're probably about 15 minutes into the day, so about a quarter of the first half hour. Let's speed it up just a little bit, Jen. We got a pretty good base here to talk about.
Okay, I made it 10 times the speed now.
Okay. So to see the market going down and back through the opening, there's no great confidence this morning. Back and forth through the opening. Testing the early morning low. Trades at the early morning low did not extend to the downside. Again, we're almost through the first half hour of trade. We got about 7 minutes to go, and we're getting no real direction. Back and forth through the opening, no real direction. What I want you to focus on here, think of all the traders from all over the world frantically buying and selling, trying to pick out a direction. Think how much time and effort is being wasted. Okay, we're back up. I believe we just tagged the high, which is also yesterday's low. Again, focus on those frantic buying and selling traders this morning, and they're getting nowhere. Think how many losses and how much psychological damage. All right, the market has come back and it's traded to the upside. So this is our first real upside breakout. Remember, overnight activity was short. When overnight activity is short, the odds are high for a counter auction. A counter auction would be long if overnight activity is short. One of the most misleading type of days we get is when you get short covering from overnight inventory and we mistake that short covering for something more meaningful on the upside. So again, that's another nuance that you have to carry with you. Trading is not easy and it takes a while, but you need to be aware of these nuances. Always have them front and center. So what are we at, 10 times right now?
Yes, 10 times.
So, we're playing at a pretty good speed, but the points I listed earlier are really what we want you to concentrate on today. Not so much anything else, but understanding value, understanding the mentality of traders that have been buying here since the first of the year, and we're now almost to the 1st of March, and also the references. We saw the first reference was the 8-period low. We saw the pullback in here come down to just about yesterday's low. Very mechanical levels. And we're looking, the more time we spend down here, the greater the odds that value will develop lower. For value to develop higher or unchanged, we need to get well back into the value area from the 25th and spend time up there. Okay, a lot of rotation this morning. Market is pushing to the upside. Again, could have been triggered by the short inventory from overnight. The only way you cover short inventory is buy. So sometimes that will force traders to buy. And when some traders come in to buy to cover their short-term inventory, that sometimes will bring other momentum traders to the long side. So you have to make sure that you can wade through this. Okay, a little bit more extension to the upside. Keep in mind how easy it is to be fooled by price. Price is nothing more than an advertising mechanism. Okay, the last pullback here, I believe, was just a tick above overnight. We have changed time periods again. One more time, the C period low is one tick above the overnight high, another very mechanical reference. Mechanical references are weak references. Think how difficult it is to keep track of all these references. There's a lot of things going on. And it takes practice to bring these all into focus. You know, you can see one at a time, but you have to see all of them and really have a mosaic of what is going on in the market. I usually start with what I think is going to happen with value. Then I look and I say overnight, what about the overnight trade? What have we done relative to overnight trade? I look at what do I think about the morning highs or lows. In here, remember, I have a question about the morning low. I don't think it looks very good. Then I look at the A period or the C period. Low here is a single tick above the overnight high. Not a very solid reference. But you see, short-term traders, they grab onto that opportunity and they immediately try and take the market higher. The more mechanical a reference is, the more likely it is that it's being used by the shortest of traders, and the shortest of traders are the weakest of traders. Okay, you see now we're back down again. We went exactly to that C period low. So that's a second time down there, which makes that reference even more suspect than it was before. Now we're down there for the third time. Tagged it exactly, took it out by one tick. So now you see, once it took that out, look at the stops. They'd build up stops there. Very short-term traders had built up stops there. And once they took that out, the market spilled to the downside. Okay, so B and C match on the lows. So that's not going to give you a lot of confidence. Okay, C is taken out B period. Did not get to the opening, which is the green dot. They're still pushing the market to the downside, back through the opening. The more time down here, the greater the odds value will be lower or at least overlapping to lower. One more time, pushing on the initial A period low. Now they've taken the A period low out. The low in D period now is exactly at half back. Again, a very questionable low. It's at a very mechanical level. The more mechanical the level is, the greater the odds that will be challenged later today. Okay, see the market trying to rotate higher again. So now, keep in mind, we wanted to watch references, but also we wanted to focus on value. We're now into the fourth period of the day. The odds are even greater that value will be lower or at least overlapping to lower. So the market, we've got volatility. Traders were still buying the break, even though it's from a very mechanical level. Remember, they've traded the market to the upside since the first of the year. Also, I will point out that Chairman Powell from the Federal Reserve was testifying before the Senate Banking Committee today. So that can also bring some, emotion to the market. But even with that, you have to be able to look at value, even though you do get some price volatility in there, and say, oh boy, we're going higher, but continue to focus on the idea of where is developing value. Okay, so we've got some extension to the upside. We are in the previous day's value area, a little more extension. We're up towards the point of control. Remember that the D period low is at half back and just above the very prominent point of control from overnight. That is not a solid foundation. It may hold, and that's where the buying came in from, but you certainly want to remember that that is not a really solid foundation to launch a really strong rally. Okay, my guess is in here that the chairman said something that, got the market going. So the market rallied up. We're into the value area from the 25th with price. But remember, today's value area, or the value area from the 26th, hasn't shown any acceptance in there yet. Okay, so we've been talking about value. Let's speed up to about 15 times. We'll just continue to play this out. We pretty well made a lot of the points we wanted to make. Following how to follow the references, how to follow value. Remember, traders have been buying, almost all breaks here for some period of time. Then it's a question of how much are they getting for their effort. All right, one more time, extended to the upside. We traded at the point of control from the value area on the 25th. The market they've sold the market off a little bit from there. So we've had some tests to the upside, but almost all those tests to the upside have seen some kind of rejection, which tells us there's another group of traders in here. There's traders in here that are selling rallies. Remember, for some period of time, traders have been buying breaks. We're seeing evidence today that there's a different group of traders that are selling rallies. We still have traders that are buying breaks, but it looks like we're getting a little bit more conviction from those traders that are selling the rallies. Notice that Jen just put the arrow on and showed that the E period pullback low was exactly at half back. Another very mechanical reference, with low odds that will hold throughout the session. Not only is that the half back, but it's also only a tick above. Half back is only a tick above overnight high. So again, one of our three things we wanted to follow today was references. And that's very important for you to keep working on these references. What they do over time, they help you start to be able to think in terms of odds. If you really want to get an edge as a trader, you need to be able to think in terms of odds. To think in terms of odds, you have to have a good understanding of what's really going on in the market. And some of the real reference points are what give you that idea of how strong or weak a market is and who is playing. When the market continually goes to weak references and rallies or sells off, those are the weakest of traders. And the weakest traders are not the traders that are going to carry the market higher. The E period buy was weak traders. Now we see the F period low is just a tick above the E period. So again, now we're down below it. So we're down. So we saw some weak traders. They've been taken out. We're one more time back into the overnight range, and notice that the F period range low, I think, is just a tick above the low from the 25th. Again, we're getting chop in here, but we're not getting any clear direction. Value is lower, a little bit overlapping, but only a tick or two. So overall, as we get further into the day, value continues to build lower. Okay, what speed are we playing at?
We're currently at 15.
Let's go up to 30.
Okay.
So it's a little unrealistic to see the market played out at 30 times, but we're not doing it to identify trades. We're doing it to focus on value, focus on references, and focus on who's doing the buying and selling? Weak hands or strong hands? All right, we said earlier that the EF lows were questionable. Well, guess what? G period has come back down and taken those out. So even though we saw the references as weak, there was a delay before the market came back down there. The reason for that sometimes is the reference is weak, the market rallies from there, but it rallies with weak inventory. And the more the market rallies with weak inventory, the greater the odds that that inventory is going to be liquidated later on in the session. Okay, so we have no clear direction here this morning. We have lower value, we have rotation. Remember, 30 times, G period is testing the low, H period opens, H period back to half back. See the white line? So the market sells off from half back, goes down, extends to the downside. The G and H low now match. So neither the low nor neither the H period low nor H period high are secure. H period high exactly at half back. Not a good strong reference. The H period low exactly at the G period low. Not strong. Okay, see how the H period came back through that weak high, but we left the GH low. A lot of uncertainty in this market, a lot of choppiness. Remember, value is a great filter to appreciate what is really occurring on any particular day. Value is overlapping by just a smidge, but mostly lower. And as time goes on, it can pull back. I can pull value lower. Okay, now we have a GHI low. So that GHI low is very questionable, very mechanical. So any buying that takes place above that is good possibility that it's going to be weaker hands buying. That doesn't mean they can't take the market higher, but you certainly want to keep an eye on that GHI low. The market's trading higher. Now we're going back into the previous day's range again. And you see we're just a tick below half back for the session. Value continues to build lower. Very difficult day to trade. A lot of rotation and no real conviction in either direction. Okay, so we got the GHI questionable low. I, we said, was questionable on the high, was just a tick below half back. J period has come up and taken out the half back level, and it's now trading at the G level. Again, a lot of rotation and a low conviction. Remember, I haven't said it today. You have no need to be in the market. There is nobody forcing you to have a trade on. Too many times what traders do, they feel obligated, since they're sitting in front of the market, they feel obligated to go out and find a trade. When you feel that obligation, that generally sets you on to a path that will not be profitable. Okay, I continue as we get later in the session. I continue to focus on value. I continue to focus on the weak D period low. Remember, even though it's late in the session, I am continually focusing on the D period low because it was exactly between half back and the very prominent point of control. I'm next from the bottom up. I'm looking at the GHI and J lows. They feel very questionable to me. Now the market's rallying. So as we get later in the session, the market is trying to take the high. Remember, this is what the markets have been doing since the first of the year. The people that made the money have been on the buy side, short-term traders on the buy side. So that's what they're trying again this afternoon. We're getting later and later in the session. Take a look at the point of control. The point of control is exactly at half back. Remember those two weak references down there. The market continues to push higher. Now, someplace in this afternoon, and I don't remember exactly where it was, but I went back and I bought the 27.85 puts. Just the reason being that the references appeared to be weak, the ones I just talked about, as well as value is remaining lower. You see, we're into yesterday's value area. We're trading in there, but it's got to do a lot more to pull it up. Okay, L period. Now we have a poor high. We have a poor high. Getting later in the session. Those two weak references down there suggest to me that the market may have gotten itself very long. You know what they're trying to do? They're trying to take it higher. I mean, you can see that. And if they're unsuccessful, guess what? Short-term inventory remains very long. Traders get all excited once the market starts to move. The momentum traders start to jump on board, and if they don't get follow through, then they're caught with very long inventory.
Wouldn't you
Okay.
say there's also one more weak reference? The K low is also the same as the 25th low, so that also is another weak
Absolutely.
to add.
Yes, absolutely, great catch. And you just, it's hard to keep track of all these. Okay, so now we've come back down, and the M period low is exactly at last week's high. Another weak reference, very mechanical. Traders go to very visual levels. Okay, now they've taken that out. Okay, someplace in here, and I don't remember where it was, but someplace in here, I took my profits on my puts. Again, it was a spec trade, but someplace in here, I took that. Now I'm still, remember, I know when I took it. I was waiting for the GHI, and as soon as they took out the GHI lows, which I mentioned were weak, I exited my trade. Okay, so as we come closer into the runoff, and you see the market still heads back down towards the lows. All right, so let's recap today. Overnight inventory was short. We probably did get a counter auction. That probably gave a little boost to the market in the morning. Value was lower, just a couple of ticks into yesterday's range by the time the day was over. We watched the mechanical references all day as the market tried to trade higher. Those mechanical references were almost all, not all, but almost all taken out before the session was over. Looking at and being aware of those mechanical references help you establish the odds of the market failing to be able to trade higher, as well as the odds of being able to trade lower. So the references, overnight inventory, keeping in mind who is doing the buying, selling in their value, and feeling those traders continuing to buy what they've done since the first of the year, but not really getting any satisfaction, being forced to liquidate late in the session. Thank you.